All right, welcome to another episode from the Chart Reader. So this is a viewer request video. We're going to look at MULN as well as Bed Bath and Beyond. Look, both of these stocks used to be money printing machines, all right? Sadly, they're just kind of they're not what they used to be, right? I'm not trying to be rude here in any way, shape, or form, right? But there's some really important things happening on MULN for sure. Last time I made this video, I really stressed the importance of this 10-cent line. And hey, I'm glad it's at least doing its job, right? I obviously wish it was doing a little better and getting us over some of these more important moving averages, but we'll talk about all those details shortly. Just real quick, what are we going to do today? Same thing we always do, right? We'll take a look at the daily and the weekly to see how this thing is setting up short term. We have our 5 moving averages. There are horizontal support and resistance lines that I do draw manually myself. And then when we're done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, look, really quickly, if you can please like this video, share this video anywhere on social media, if you can comment on it, subscribe to here, anything you can do really does help with the YouTube algorithms, but I promise you, just being here and giving me your time is super, super appreciated, all right? And then, hey, if you disagree with anything I got to say, throw it in the comments, all right? I'm not here to hate or anything like that, all right? We're just educated people sharing our opinions here, all right? So let's get into it. And, I was optimistic in this little run right here, okay? The one big thing I stressed was that the 20 moving average is no joke, and clearly we see what happens. It makes a good run to it. It was definitely a 50% move from 10 cents to 15, right? But end of the day, I really didn't see it happening, and yeah, we failed pretty hard after, right? The one good thing is, again, because this 20-cent line, I'm going to go to the monthly just real quick, zooming out. This 20 cent was our previous all-time low. All right. So once we lost this line, we quickly dropped actually a little more than 50%, hitting in the nines, if I'm not mistaken, right? Yeah, look at that. We actually hit 9 on this day right here. Okay. The one good thing is, because look, in this drop from 20 to 10, we obviously get a green candle here, but it doesn't do anything the next day. Green candle here, but doesn't do anything the next day. We get a green candle that gaps up. That's good enough for me to draw a new all-time low support, all right? And one of the things I said was if we lost 10, we were going to see 8 really quickly. I always say it's like 20% increments really, really quickly once you fall into that all-time low black hole vortex. It's a bit of a mouthful, but black hole vortex is what the all-time lows really are, okay? Instead, the 10 does its job. We wicket here once, wicket here twice. It actually saves this stock 2 days in a row. And we've now seen a nice little going on up, right? I'm not going to call it an uptrend, but yeah, we're going on up the last couple days. I very, very much wish we got over the 8 moving average. And look, I think this doji is very, very indicative of where the market is right now, okay? I always say doji doesn't count, and the next day should be pretty telling of what the truth is, all right? And I think people are just not sure if we're going to break the 8 because really there's not a lot of space between the 8 and the 20, right? Like once you break this, which isn't going to be easy, it's going to take a good amount of juice. You've got the next bad guy right behind it, right? So I don't like when the lines are this close together. However, breaking this orange line and having so many red, like there's a lot of recovery to be made here. Like this thing wants to come back to 14 cents. It really, really does. Excuse me. It just really needs to get over 12 cents. And hey, look, going from 12 cents to 14 cents is a 20% swing. I know it only seems like pennies. And I know people want to talk about like 50 cents, a dollar, $2, $5, $10, right? Like, dude, we're it's gonna be so hard to break 25 cents. All right. And you really need to be realistic on that. Because, yeah, maybe if we break this 20 moving average line, maybe we'll run all the way to 20. I honestly said I think it's 14. I think this guy right here is going to be a little bit of a difficult break right there. I'm actually going to go ahead and draw a new line right there on that. But going from here to here, yeah, that's a 20% swing, right? That's not that bad at all. So just be realistic. I was a big fan of just saying be realistic, all right? So End of the day, we're still under the 8, we're still under the 20, and that scares me, right? MACD looks okay. I like this like green going above the red, and it seems like the green wants to keep going up. I wish the RSI was doing the same thing though. Number is a beautiful number. This is really low, and there's plenty of room for it to go up, for sure, for sure. But I wish we saw the same like separation between green and red. And look, volume again, it's been decent the last couple days, but none of them have even crossed the 50 moving average, right? So 170 million shares is a lot for most stocks. It's actually not that much for MULN, which is funny. That's why I laughed, right? But yeah, MULN needs to be in the 400s, if not maybe like the 300s, right? I think this is what we need to hit for anything to really substantially happen. But MULN, I'm not too excited about just yet. Again, I see more needed recoveries than I see reasons to. And look, again, the 8 moving average on the weekly is 15. It's going to be hard to get over the 8 on the weekly. All right, because just look at this thing. Look how long. Jesus Christ, whole mess of under, barely a little over. Whole mess of under, sprinkles over. Only right, like don't underestimate the difficulties of these lines, but hey, don't underestimate the profits a couple cents will bring on an 11-cent share. Okay, so again, not here being pessimistic, just being realistic, right? So if you disagree with anything, throw it in the comments. I really will not be here to hate on you, I promise, okay? So let's look at this stock, and let's be honest, this is ugly, all right? However, there are swing strategies when you see something like this. First off, red is a beautiful reason to believe that this thing wants to come back to 81 cents. 81 cents is more than double this 30-cent stock that we're at right now, right? However, look how hard it has been to break the 8. Okay, it's not going to be easy getting over this green line, all right? From there, it's even that much harder to get over the orange line, right? So I'm not exactly sure we'll come here. I think I saw after hours was going on up. It's not that much, right? But I think there's reason to believe, and you know, I don't like after hours, right? I think looking at post market is an easy way to get your hand stuck in the cookie jar. I just was really curious where it was. I really more care about regular hours and this 6% candle that we see, okay? But there's reason to believe that we might start taking a good amount of these reds. Even coming to this right here is give or take half, right? That's 4. These 3 are a lot bigger. Coming here is realistic, right? 38. And let's be honest, it's actually probably going to be a little closer to 36 because I'm imagining that this line is going to come down tomorrow, right? Again, I don't know the math behind these lines, but this thing has been going down every single day, right? So you got to imagine it's going to come 1 cent lower, 2 cents lower. I have no idea, right? Breaking this is where I might be interested, and I'm actually going to set an alert. I'm going to go ahead and set an alert at 39 cents. Breaking 39 might be reason to believe we'll make a move to this 69-cent line. All right, because again, that's how it works. You break the 8, hopefully you run to the 20, break the 20, hopefully 50, and so on and so forth, right? I would love making this because let's just zoom out real quick. Let's just zoom out real quick. Let's just zoom out. Let's go to the weekly. Let's keep zooming out. We're already in 1990. Let's go to the monthly. There is nothing here to make any sort of like resistances on, right? Even on the weekly, look at it's nothing but blank and red, right? As we come to the daily, there is no resistance in sight in between this gap right here. I would much rather wait for the 8 to break and hopefully ride it to there. Honestly, going from here to here, again, it's a decent swing. It's little less than 20%. No, it's actually, again, assuming it comes down, it looks like it's about a 20% move, right? You're going to add about 6 cents. That's 20%. But I would much rather go from 38 to like 70, almost double, right? Give or take. So again, just my 2 cents here, but end of the day, struggling with the 8 and the 20, not a beautiful, look at this is an ugly, ugly weekly, right? And again, there's reason to believe, hey, maybe we'll come to 90 cents. 90 cents kind of lines up to where this, no, not really. That's more to right here, right? I still don't think we're going to cross 70 cents. I think this 90 cent is a little optimistic, but again, just goes to show you there's a very, very, very few resistances given how bad this thing is right now. So just be careful here, but yeah, there's plenty of reason to believe. Look at that, MACD's not too bad, RSI is getting there. We definitely need a second day of volume. This is only the first good day of volume, and Jesus Christ, look how long. And really, even all of these aren't that good. So just being realistic. Again, let me know if you disagree, but reason to believe you can make some money here. So hey, trade safely out there.